Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
Tim, how long can this asset bubble of everything, it seems, continue?
Man. That's amazing, isn't it? Well, we've talked about this for a long time since you and I have been talking, and looking back, I really thought that it had started to unwind in 2020, and then, they did their magic and they've blown it into the biggest bubble, I think, ever in history, in the history of the world. I think this is akin to, in more ways than one, the South Sea bubble. And, the South Sea bubble was by and large about the expansion of debt in which created, a massive bubble. And here we see it with literally everything. You're correct. It's a bubble in everything. And, as we sit, we are seeing some warning signs. There's non-confirmations on a broad array of stocks and, indexes and averages, and even some sectors, that are have formed non-confirmations and are trying to peak at this cyclical juncture. Another warning is I just checked the numbers before you called, and they had reported the number for today, and I'm tracking it on a spreadsheet. And so far this month, we're at 19.7 trillion in the reverse repos. And, bottom line, those operations, it's nothing more than a tool to sell treasuries and hold short-term rates up. They're, what we've talked about that, they want rates low, but they don't want them below that 2020 floor, because as we've also talked about, I think that's a trigger point, a potential trigger point. And, got to keep the house of cards going as long as you can. But anyway, back to the repos. This is the 12th day, talking about warnings. This is now the 12th day that we've seen over $1 trillion in reverse repos to hold those rates. And like I said, back in March, for the whole month of March, we saw $432 billion. We're seeing today was the 12th day at over $1 trillion. So the effort, my point in that is that the effort to hold these the short-term rates have just kind of, they got them off the floor a little bit. They've kind of plateaued, but it's taking more and more and more effort by the day to hold it. And so, everything seems fine because nobody is looking at this. Everything, the mainstream indexes averages are at all-time highs. Nobody cares about all this other stuff under the surface that is sending these warnings. And, I maintain that, it's going to set up, it's just the nature. I've studied, the bubbles in history, and just like, the 2020 top is a good example. It's a recent example, the top in lumber. I mean, we mentioned it, and then before we could cover it in the next show 2 weeks later, it had already broken. But my point is that I think that when the setup comes, it's going to come quick. It's going to be very obscure. And if you don't understand the structure, you're going to miss that. And then all of a sudden, bada bing, bada boom, it's going to crack, and it's just going to break. And that's going to come either when they lose control, or they decide to back out the door on it. I don't know which it will be. I don't know which will come first, but one or the other will eventually happen. And when it does, I think it's going to be hell to pay. But structure, regardless, every bubble in history, I don't care if it's the sugar bubble of the 70s or, any bubble in history. There's a certain structure that has to be there, and that's what I'm watching for and reporting on to subscribers. So anyway, you're right. It's a bubble in everything, and for right now, everything feels fine.
And, of course, the advice buy the dips has worked out fine for most people.
It has worked out. Bob Prechter mentioned to me one time, and it's really a true story. He said, the people who have known the least, how did he say it? Oh, something to the effect that market knowledge, that's something, I don't remember the exact quote, but he said something to the effect that anyone with any market knowledge has paid the price through this bubble, because they recognized it and said, "Well, this is not right." They looked at the technicals, looked at the history, and they knew what they were dealing with, and so they've been too cautious all the way up, so to speak. So any kind of market history and recognizing it for what it is has cost them. But who could have imagined this thing holding like this? I mean, $1 trillion a day to hold these rates. It's insane.
Now, what is a reverse repo? People say, well, we kind of know what it is, but we can't describe it.
Well, that's the boat I'm in. I kind of know what it is, and I can't describe it. I listen to some people talk about it, and I don't claim to understand the inner workings of the Fed. It's terribly complicated. I'll read it, and hell, I still don't really understand it. But the bottom line is what they're doing is they're selling treasuries, and it's a method, it's a tool to hold a floor under the short-term rates. And, some people say that what they're doing is they are supplying collateral to the market. I don't understand those operations. I don't. The bottom line from the angle I'm looking at, and you can see it on the charts, is that it is a tool to hold short-term rates. And beyond that, I really haven't even bothered to try to figure it out.
Well, I don't hear the banks being stingy with their money at all. I think with all this extra cash that's being provided, they're being told, or they're the ones who run the Fed, by the way. The chair is appointed by the government, but the banks run it. They own it. Is just get that money out the door and see what happens. Just as long as the money's going out the door, somebody holds the bag somewhere.
Yeah, and at some point it's kind of like the old musical chairs when it all stops. Somebody, it's gonna stop. But when does that happen? That's the danger when you get into a situation like this. It's just it just becomes more and more dangerous, but it just keeps going, and the more it keeps going, the more complacent people become, and then it just that's the nature of a bubble, and that's the environment that we're in. And you mentioned it being an everything bubble. I think that I see it in collectibles. I see it with vintage stereo equipment. It's an interest of mine. I see it with vintage watches. I see it with vintage anything and everything that I'm aware of. I see it with cars. It's just hell. It's everything. And as I look at it, I've said that everything bounced out of some longer term cycle bottoms in 2020. For example, commodities, there's a 3-year cycle low, and in equities there's a 4-year cycle that'll follow. So we bounced out of those lows, but I think everything bounced together, and I think everything's going to go down together, just like in 08. Looking at back at 08, equities peaked first, and then we saw that's when we had what they call it, peak oil. And oil peaked in 08 following the equity top. But here, I think what we've seen is, oil energy sector is leading this, and there's good evidence that the energy sector has turned. We talked about lumber way back in May, because I saw it trying to set up, and then, like I said, before we could get to the next 2 weeks, it had already broken. Last time I looked at lumber, it was down over 70% from the top, and that was in like, I don't remember, 6, 7, 8 weeks, something like that, short order. And gold, I think gold has peaked. longer term, we have some short term low in place that's I think is counter trend. But I think everything is slowly beneath the surface trying to set up, and then the battle that's at hand is they're slowly, with these reverse repos and who knows what else is going on that we're unaware of, trying to hold this thing. And at some point, you reach the point where it just doesn't work, or they just try to ease out the door and kind of let nature take its place. I don't know which it'll be, but I maintain this statement as well. It's unsustainable. There's no bubble in history that hasn't popped. None. Zero. No one can show me one. They all go. The question is, how well can they maintain it? How long can it go on? And then, we will see the structure. The structure has to be there. And so, as frustrating as it is to watch it go on day after day after day, we do have that comfort in knowing that, we will see it.
Now, of course, we have banks trying to shovel this money out the door. They don't want you to have a savings account. Oh, it doesn't pay anything, or take out GICs. It's still below the rate of inflation. But if this thing collapses, at least that money's still there. What happens to all these people who've been told over and over by investment people? I don't know if they really are advisors, but investment people, that you have no choice. You have to be in the stock market.
Well, I think that's bad advice. I understand that it's good advice. It was good advice yesterday. It was good advice, last year. But to not recognize at the same time, that's what I was saying. That's what the essence of what Bob Prechter was referring to. Anyone with any market knowledge, this has been detrimental because they realize the extreme, not only that we're in, but that we've been in and that we're still in. And so, yeah, you look like a genius to say that, in hindsight, but it's also short-sighted to not understand the environment that we're in. It's kind of like walking a minefield, you took that step and everything's fine, you're grinning ear to ear, well, take the next one. And at some point, that's literally the environment that we're in. I don't know how else to say it, but, at some point, and then those people who had no choice, however you said it, but to be invested, that's the ones that's ultimately going to suffer.
We'll have more with Tim Cyclesman Wood right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's going on with the U.S. dollar?
Well, up and away. We've been bullish on the dollar. And short term, I think we're moving into a low, and there's everything ebbs and flows, but I think longer term, we've had, a significant bottom in the dollar. And I think it's overall is working its way, higher. Like I said, short term, we should be moving into some sort of a low, and then up we should go. It's kind of the opposite of what's happening with commodities right now. I think they're peaking, or in some cases they have peaked. Like I said, I think the energy sector has, so it's kind of the inverse of that.
What is your advice right now? We always know the fall traditionally is the scariest time in the stock market because that's when most of the major corrections or crashes have happened. Do you see anything setting up for this fall?
I think the potential is definitely there, and again, it comes down to the structure. That's what I was saying. I see the warnings with some of the underlying indexes and averages, even some of the key stocks and certain sectors such as energy and others, but and some of the cyclical proxy stuff that I have. I mean, it's all trying to turn, and there's literally this tug of war between the natural forces of the market and to turn and holding it. So it comes down to, do we see the structural setup on the mainstream indexes and averages take hold? If it does, then they in effect have been holding the whole thing, because everything else is trying to turn. So once that happens, and does it happen today, tomorrow, a month from now? I don't know. I'll see it when I see it. That's the thing that we're constantly monitoring. But once that happens and we see it, just like we did in 2020, then bada bing, bada boom, then you're at the trap door. But I guess my advice is structure is key from my seat, and understanding where we're at. So I don't know if I answered the question or not, but it all comes down to structure.
What about these young Robinhooders trading on their phones for what they think are commission-free trades, but of course they're secretly paying for it? They've only seen a stock market that has gone up. Some of them have made fortunes on these meme stocks, GameStop, AMC, and Robinhood itself became a meme stock for a while, jumping from its IPO, I think almost tripling in value. It could have been more or less than that, but now it's almost fallen back to its original share price, and people are telling me there's very few opportunities in these so-called meme stocks left.
Well, it reminds me of the stories of the shoe shine boy in the 20s. We've always heard that. And they haven't learned their lesson. It's easy when everything's going up, and you don't have to have any market knowledge. You don't have to do any analysis. It's just, just buy the dip because that's all you know. That's not experience. That's not knowledge. That's not analysis. That's just being lucky for the moment. They'll get their lesson.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com, and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.